Welcome to the Big Mike Fund Podcast, where you'll learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in. Because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fund Podcast. I'm the Big Mike, Mike Zlatnik. Today it is my pleasure and a privilege to welcome Fuquan Bilal. Hi, Fuquan.
Thanks for having me on the show, man. I really appreciate it.
Thank you, Fuquan, very much for joining. Fuquan is a brother from the Collective Genius Mastermind and the Freedom Founders Mastermind. He is a brilliant educator, investor, super awesome guy. He's got a great family, and I think he's a super athlete too. So without further ado, Fuquan, would you tell us a little bit about you, your family, and a little bit about your real estate and maybe your super athlete abilities too?
Thanks. I really appreciate that introduction. I feel extra special this morning. So yeah, I mean, I'm a superhero to my kids first and foremost. Try to be. I'm a single dad, so it takes a lot. I have two boys. To be a leading example every day. So I like to play that superhero role, throw my cape on in the morning, and kind of try to influence them by some of the actions and things that I do. Also, I've been in real estate for about 21 years. So I've been in sales all my life. I can remember all the way back to my mom used to take us to bazaars and flea markets to sell stuff that she would buy wholesale from Chinatown. And then, that's when I began my first part into sales. So by doing that, it just encouraged me to be like an entrepreneur spirit. She installed the hustle spirit into me. And I went through corporate. I did sales in corporate. And finally, in 99, I jumped out the window and grew wings flying down and got started in the real estate business. Started off doing some fix and flips. I had the opportunity. I went through two market cycles, 9/11 and 2008, and had the opportunity to rise and fall and start all over again. And what I like about the real estate business is multifaceted, right? You be fixing and flipping. You can buy notes. You can do a variety of different things and have success in that. Around 2013 was when I finally got the guts to really take it to the next level and started to raise capital. Now I've raised capital for smaller deals when I started off in 99 from a private investor, from hard money lenders, but I was trying to figure out a way on really how to scale. And of course, you have to have the product, you have to have the money, and you have to have the systems in place to do that. So for me, the biggest bottleneck was always having enough capital to buy the amount of deals I wanted to buy. And in 2013, I took the leap of faith and started off with friends and family and opened my first fund. And that was to buy notes. So that's been my journey since then, trying to master that. Fund manager, everyone looks at that as, fun and exciting. It is, but I always reference it as having kids, being a parent. Right? There's learning pain, growing pains, and everything else. You have your goods, your bads, your ups and downs. I mean, especially when you're dealing with people, capital that they work hard for their retirement. You always want to put your foot forward and make sure that you're being a responsible person and that you're growing their investments as well as making money for you, right? So that's the fun part about it. I love real estate. I'm a real estate junkie. I love doing deals. So yeah, that's a little bit about me, Mike.
Thank you, Fuquan. That was a lot of wisdom, and I just like your superhero to your kids. I think it's important to try to be the superhero to your kids and to the community. And a lot of, we live in challenging times and they're very dynamic times. And so let's continue a little bit about capital raising and you're very successful at this. And by the way, one quick commentary as a fund manager myself, people think, hey, it's all walk in the park. It's a lot of work. It's unfortunately, or maybe fortunately, if you like this stuff, and I love this stuff, it's the work I enjoy, but it is work. Managing other people's money is a responsibility, and it's hard work. It requires systems, processes, it requires deal flow, it requires communications. So we chatted a little bit earlier, and I was super impressed with one of the things you do phenomenally well. So you take really good care of your investors. You manage these relationships on the level better than I do. So I'm so impressed with your. I'd love to pivot and talk a little bit about that. So part of the capital raising is doing a great job managing relationships with your current investors, keeping them happy, keeping them informed, and improving at that, and eventually asking for referrals. So talk a little
Yeah.
bit about that. What do you do there? How do you do that? Because it's very important. It's important for you and it's important for your investors, and that helps you grow the business.
Yeah, absolutely. So, I look at raising capital as a whole nother business, right? So I thought getting into it, I just would speak to an SEC attorney, open up a fund, and then the money would start come pouring in. But it didn't work. It didn't work that way. Nobody told me I actually have to go out and like create relationships and raise money. And for those of you who are listening, who are looking, to get into starting to raise capital or be a fund manager, it's all about relationships. And it took me 2 years really to understand that and figure that out. These are your financial friends. Your net worth, your network is your net worth. And once I really started to dive deep and understand how this whole thing worked from building relationship, it takes time, right? It's like planting a seed to grow a tree, right? So taking the action steps, which for me was building a track record. Because what I noticed earlier on, I had the SEC attorney set it up. So everything, the documents were right and the business plan was right. But then where was the track record? So even though I already had years of experience, I knew what my track record was, but the investors didn't know. It wasn't documented in the PPM showing your historical returns. And I would always get these questions at the beginning. I was like, wow, how are these other guys raising money? Is because they've been in the business long enough where they built a track record, they built those relationships, they established credibility, and people knew, like, and trusted them. So I had to figure out a way on how I can accomplish that as well. And it just came down to time and doing what you say you're going to do, paying people on time, being a man of your word, having integrity. All those ingredients play a big part into becoming a successful fund manager. Now, I still believe I have a lot of work to do because, I haven't raised 100 million yet. So, that's, one of my goals is to do that. And that would give me fulfillment. I know probably when I get there, I'm going to say 500 million. So some of the things that I do, that the question you asked, is really cultivating those relationships. One of the things I started to look at and say, what can I do differently that other fund managers are not doing? So I started to ask investors, what are some of the biggest challenges you have when you invest into a fund? The number one question was, I don't get my K1s on time. I wrote that down. How can I improve on that? The other answer was communication. So let's elaborate a little bit more on communication, because if someone has your money and they're not responding to your emails or calling you back, then that's, just a bad dealer. Like, why would they do that? They said, well, they're not available when I'm available. I'm busy. I work 9 to 5. They have a 9 to 5 shop. So it's really hard to get that communication. Things get delayed. Emails, going back and forth with email can take a week to resolve something. So I started to take note of that. And I said, okay, let me start with this area first, with communication and K1, and let me see, what the benefit would be. I'm already paying them on time, which most of the guys who was in my circle, fund managers, they were doing that. They wanted to make sure the payments went out on time. They wasn't late. They was pretty much focused on that and everything else. So I said, let me focus on the area which is really problematic. Let me focus on getting K1s out on time. Actually, I got my K1s out, I would probably say maybe almost a month ago.
That's a great job. We're recording this
Now, some people will
in early
go, well, how
April.
many investors you got? 2? Like, they would say that. And I'm like, you don't understand what goes into making sure they get out on time. It's staying on top of your third party, because you and I, we both use third party fund admins. It's staying on those guys. When they send things over with questions, answering them immediately, putting the ball back in their court immediately. So there's no reason that they have to be delaying getting you your stuff. If it goes, some guys, I speak to them, they get annoyed when a third party company or the accountant send them stuff, because it's a laundry list of questions. Like, I make that the one thing. I jump into it, attack it, answer it, get it right back to them within 24 hours from the time I get it, constantly keeping the ball in their court so I can get what I need. And I learned how to do that over the years. And I noticed that I was the bottleneck that was causing a delay. So I said, how can I improve on that? Let me automatically respond again with communication. Let me communicate back to my third party immediately within 24 hours. I don't care if I got to do it at 9 to 10 o'clock at night. I'm going to sit through. It's not going to take me more than an hour to go through it. We do it twice a month, the 15th of the month and 30th of the month. Or you could do it 3 times a month, the 10th, the 20th, and the 30th, to kind of break it down, because there's a lot of transactions. So when I started to master that, and my goal was by January 5th or January 10th to make sure that everything for December was answered in, and then now I'm turning the clock on them. What's going on with the data? I need to get it to the CPA. And I'm prepping the CPA. It's coming, it's coming, it's coming. So by the time it gets into his court before January 15th, now the pressure goes with CPA. Well, you got everything. The third party company put it on a silver platter for you. What is it that you have to go through? You got access to the bank account. Let's go. Let's make the goal by February 15th to get K1s to the investors. They all look at me like I'm crazy, but we push. And we usually get it somewhere around the 1st of March, somewhere around there.
That's very impressive. And your fund does both notes and real estate, right?
Yep. So it's a lot. And that's why I said being able to respond quickly with all the transactions and everything going. I mean, they have access to the loan servicer, they have access to everything. And, having that quarterly meeting with your accountant, also looking at the books and that helps a lot as well. Your accountant is coming in and looking at the books. So they already seen Q1, 2, 3. They just waiting for Q4 and you're ready to execute with that. They may have a few questions and boom, March 1st, March 10th somewhere, K1s go out. And I feel good. Now I could because that's the biggest pressure we all have as fund managers in Q1 is to get those tax returns filed, get everything going. And once you do that, that's like, okay, now I can focus on delivery. So that was one of the things, Mike, K1s.
Right.
So I solved that problem. The next thing was communication. And in short, I had to find out, because I block my time with my family and do things with my family. And most guys clock out after 5, 6 o'clock, right? What I mean by that is, it's time for supper, the kids and wife, they take off their work hat, and then it's family time. So I said, okay, I can actually still have my family time, but make myself available for my investors, because you have West Coast, East Coast. So I make myself available to 10 o'clock at night, because that's 7 o'clock on the West Coast, right? We raise a lot of capital from the West Coast. So I had to make myself available for these guys. These guys are busy professionals. They work 9 to 5, right? So they might be an accountant, an attorney, or whatever profession they're in. How can I make myself available when they're out of work? So that was working a little bit. Most people, same issue, same challenge, family, everything else. When they get off from work, they got to be with their family. So I said, let me try the weekends. Let's see, I made myself available on the weekend, on Saturday and Sunday. When they open up my schedule, it's 7 days a week availability, maybe at night, maybe in the morning. It's all over the place. So like, all these options. So I removed that communication piece out. Like, there's no excuse for you not to communicate or ask questions if you have anything to reach out to me. The other thing what I started doing is I have an investor relations department, but what I usually try to do in the very beginning, what I actually do is nurture that relationship, coming in and continue to follow up and nurture it. A lot of people say, well, just deal with my investor relations department. This is my company. And when you come in, you go over there and you deal with those guys over there and they'll take care of you. I'm on the front line. When that call comes in, I want to get to know them. This is someone who I'm going to have a relationship with, probably for the rest of their life, for the rest of my life, the rest of my investing career. So I want to create a real genuine relationship. I want to make a real connection. I want to know about your kids. I want to know about what gives you your feeling of importance. I want to share with you what gives you my feeling of importance. So it's more than just a business transaction. It's a relationship. A financial friends is basically the foundation of it, but I'm creating a real relationship. I'm just not calling you to raise money from you. I'm calling you to figure out how your kid's doing. We're talking about maybe an issue you have with your son or daughter. Maybe I can give some input. Maybe you can help me because you're older than me. You've been a parent. You got kids that are older than my kids, and you can give me some direction. So it's really building a genuine relationship with them, having great communication with
how do you do this? So how do you you get a new investor? Let's just dive into a little bit more. So everything you said on K1 is music to my ears. We have that issue every year, and obviously it's we have a little bit more complicated transactions because commercial deal flow. But it's important we drive very hard. I call my team is they're hounding the sponsors. They're hounding everybody we invest with. They're hounding them because we got to get our K1
It's different for you because you have a fund-to-fund situation, and you rely on other fund managers and sponsors to do their thing and get it to you in time. So you're in a whole different arena.
But we have still same exercise of hounding. We got to get the stuff done as soon as possible. And I didn't mention this to you, but we are launching. I think we talked about this. We're launching Pure Income Fund. And we decided to avoid the K1s. We're just going to do interest 1099 int. That solves the entire. By January 31st, everyone gets that 1099 int. You don't have to worry about that. But it's hey,
genius.
Sometimes genius things are very simple.
Yeah.
So we're doing that. But let's go back to your investor relations and how do you reach out? Do you reach out after you make a couple of payments on time? What's your process? Just curious, how often you do it? How do you process? Do you call them? Do you email them? Do you ask, hey, let's get on the Zoom? Just curious, what do you do? Because we live in I think Zoom is a whole lot better than a regular phone call. You get to see somebody. But
yeah, we do all of the above. We actually we try to meet them where they are. So, when I speak with them, I ask them, what is the best form of communication? Would you like a text message? Would you like to jump on a call? I like to press the flesh. I like to meet them in person. So if I met them at an event, maybe I will continue to go if I sponsored at that event, of course, I'm going to be there. I'll make sure that before I go to the event, I reach out to them to block some one-on-one time. Because if I'm sponsoring at an event and I'm at my booth, I'm dealing with multiple people at one time, it's kind of hard. So to make that deeper connection before I go out to the event, I try to schedule time to speak to them. If I met them a year prior, I just remind them, hey, I want to block out 15 minutes to kind of go over some things with you. And it's really truly about their goals and what they're trying to accomplish. What gives them the feeling of importance? That's to me, the main driver, because that's really all they're concerned about is how what you're doing can benefit me and get me to my freedom number and my goal that I need to accomplish. So I try to focus on that. As far as the communication piece is all the above, whether it's Zoom, texting, emailing, I just try to create like an omnipresence. And what I mean by that is I'm on social media and I just talk about what I do. I show what I do. If I say I'm flipping properties, I'm showing that I'm doing that. If I'm buying tax liens, you see me at the auction. If I'm in the note business, I'm giving you education on note business. So kind of just create the reality and show them, hey, I walk the walk and I talk the talk. So, and that is all part of communicating also, whether it's through social media, whether it's through a text message. Hey, I'm not raising money, but hey, I'm just calling to see how you're doing. I haven't spoken to you maybe in a couple of months, just sending you a text, sending good energy your way. Hope all is well. Some respond, some say, thank you. That was sincere. I appreciate it. No one else has reached out to me. Because it's all with a fund manager in their mind. I want to take away I'm just calling you to raise capital from you. Right. And that's truly what most fund managers do. They got a deal. They start pounding the phone. Hey, how much you got? How much you got? How much you got? It's never truly about anything other than that. So this is a real relationship for me. When I started to look at it from that perspective, more than just raising capital, that's where I started to find success. There's a better connection with the investor. And with all that communication to them, maybe I'm on a Zoom call and I might see something in the background, maybe their favorite sports team, or maybe it's a vase or something. And I'll ask a question about that and see how they respond to it. And I know that triggers them, get them excited. So then I may send them a gift or something that's related to that, or something that's personable, right? In our conversation, I would listen to something that's personable. Maybe they got a favorite cat or a dog or anything. Maybe I might send dog clothes or anything that I think can, basically touch on a personal level, right? And thanks for the gift you sent me, by the way. I appreciate it. It was it made me feel like one of the Tom and Jerry cartoons. I don't remember the show. You open it up and it's smaller and my kids were laughing. I appreciate that.
Oh, you're very welcome. You got the Matryoshka doll. Yeah, it's it is sort of a cultural thing. It's grew up in the former Soviet Union, from Russia with love, right? It's Matryoshka doll is one of these classic Russian souvenirs. It's pretty cool. It's the whole family. You got to let the family out. I
realized that.
You get the great grandma, the grandma, the mom, the whole thing. It's
all the way down to the next generation. So I kind of framed it as generations. These are generations. This is the last one, and we got to make sure this last one is safe. So I kind of framed it to my son like that. How do we create generational wealth? He's like, everything got to be financial all the time. Let's just have fun that it's one smaller and smaller and we don't know when it's going to end. So, but that was a cool gift. But getting back to that, making it personal all the time instead of just transactional is where I found a lot of success. And that communication piece is very important. Like, a lot of people struggle with raising capital. My question is, what type of relationship do you have with the investor? Is it transactional or is it deeper than that? When they see your number, do they like, oh my God, this guy's called me for money again? Or, whatever else. So instead of hunting, I like to fish, Mike. I like to just throw the net out there, whatever comes in the hook, just reel it in. If I can frame it that way. I don't want to be badgering people to raise capital. I just want to let you know, here's what I do. You can visually see what I do. I'm out here in the field and I'm a little bit different than other fund managers. I'm actually in the trenches. Like, it's nothing wrong with sitting behind the desk and doing your thing. It's not for everybody, but I'm actually on the front line, motivating my contractors, going to sites and shoulder to shoulder with them. So that adds a lot to it as well. I get a lot of calls from people who say, hey, listen, I see you're actually out there. I can actually see my money working. I see what you're doing. I send them updates of renovation projects. They can see it on my social media projects that the fund is investing in, the transition of it. So a lot of that, I think, plays a role into why I've been successful raising capital, because of the relationship building and communication, and definitely the K1s on time.
Well, I appreciate your wisdom, because the most important thing is you're really trying to build human relationship. I mean, we're living in this digital age, and we're living in this, everything is just too formal and we're too busy. And you're absolutely right. Going out of your way to build that interpersonal relationship makes all the difference. And it's hard. A lot of us just too busy. And if you're in the corporate culture, corporate world, these personal relationships are difficult to maintain. It's almost like everything is business. But when you go that extra mile, people enjoy interacting with Fuquan, not with the NNG fund, right? It's not no longer a fund.
Absolutely, and I'm glad you mentioned that.
It's a personality, and it's sort of your personal brand. You've been building your Fuquan personal brand, and it's important. I think it's very important. So I appreciate you sharing that
And
wisdom.
I'm glad you mentioned that. One of the reasons I was never big on social media, and there was a gentleman who came to work with me, and he said, if people can only see under the hood what you do, you will have a deeper connection if you humanize yourself. He said you need to use social media to do that, because when you go to these places, they just see you with the suit behind your booth with energy. They don't really know who you are. So I was like, oh, okay. So we started to do the social media thing. And this general stuff I do with my kids, with education, with all that, we just started to record that and show that. And a lot of people, even if they're not investing with me, they're inspired by that, because these are things people want to do with their kids. They want to teach them about financial freedom. They want to teach them, certain things that will help them evolve in life. And I just started to display that to let people kind of see under the hood, and he just humanize you, and you create deeper connections with that, because people get to see you as the real person. One of the things that you mentioned really was important was when people invest, they essentially invested into you, right? They want to know the historical returns of the company and everything else, but they want to know really who's the person behind the scene, like who is the driver. And basically that is where the connection is made. And when they can make that connection, they're going to go. So, and even with the referral basis, when someone is excited and happy and they talk about you all the time, their friends hear it and everything else. So when you do reach out and say, hey, listen, it's been a year, it's been 6 months, I paid you on time. I have another deal I'm raising capital for. If you know anyone else who want to get these returns like you, who want to get paid on time, or just have that same relationship, do you know 3 people? And they usually will refer maybe one. And then, if there's a process we go through and getting in contact with that person and trying to build and establish that relationship. And it takes time. I'm right now, I can tell you, I started raising capital in 2013. And I think in this moment now, I'm really starting to see the benefits from all the seeds that I planted, right? It took a while to create that historical return. You're talking, with 7 years really to create those relationships, that traction and everything else for it to now, the fruit really grown from the tree in abundance. So I'm really grateful for that and all the relationships I've created. And then, you would just create cheerleaders essentially, and you have to ask for referrals. You start having people reaching out to you. Like I was saying, instead of hunting, fishing, you have people reach out to you because you have these cheerleaders who are speaking about all the great things that you're doing. And when you're doing it sincere, people can sense that, right? People can sense that. Or if you're just doing it with something behind that you're trying to accomplish. So I always try to really to meet people where they are and make it genuine, and you get the reciprocity from that. So that's really my take on it, is really creating strong relationships, doing what you say, of course, paying on time, and really figuring out what gives them their feeling of importance, and just focusing on that communication, making yourself available, and those things, making it personal
Yeah,
instead of transactional.
agreed. And I subscribe to everything you said. I mean, we do the same thing. We try to make time available. I don't want to call it 24/7, but certainly weekends and evenings, because we work with similar community of investors, and we need to be flexible. That's the difference between a small fund manager and a big fund manager. Big fund manager is not going to be available on weekends. That's just, to say the least. But you're right. Raising capital is like planting a tree. I had a different expression, but I like yours a whole lot better, because as they say, money doesn't grow on trees, but it does. If it's the right type of tree. Raising capital is like pushing a train. I mean, I hate to say this, but it's hard in the beginning. We work hard, and it's very hard to get that thing going. But if you do the right things, you get the train going. Then people hop on a train because it's a good train, or it's a good tree, right? You planted a good tree and you've been watering it for years. So appreciate your wisdom. Quickly, let's pivot. Just a couple of final words. You're in New Jersey. Just quick update on what's happening in New Jersey. I mean, we're recording this early April. Um, how's real estate in New Jersey? How things are going? I'm in New York City. New York City is still in this call it flatline funk. A lot of people left the city, but now it feels like a little bit of reopening in New York, because the restaurants are allowed to reopen. I don't know when the Broadway will reopen, and museums, but it feels like things are getting better here. How's New Jersey doing?
New Jersey is on fire. We got all the New Yorkers coming over, buying up all this real estate, overpaying for rent, for houses, everything. This makes me feel like 2007 times two, when the market was at its highest peak. And I never thought I would experience this again. I thought that what I experienced from, I would say 2004 to 2007 was the greatest point of my life, because I've sold so many properties and did so many transactions. And when the market crashed, I was just like, wow, we'll never see that again. But it's actually happening like now. And it's crazy, Mike. I mean, properties, I just sold a property the other day for 510 grand, a property that I really 2 years ago would have probably sold maybe for like 285. Like, it's ridiculous. Like, it's unbelievable. Like, the New Yorkers
It's
are coming
the whole
paying
country.
cash.
They're buying it for cash, right?
Well, they're doing 1031 exchange. They're selling the house in New York, and doing a 1031 exchange into a multifamily in Jersey, where they can live in one unit, rent out the other two, or rent out the other one, and make some money. But the part that baffles me is the areas that they're willing to move into, unless they know of a plan that's coming 10 years from now and they're trying to get it on the ground level. But the stuff I invest in is C-class areas. Is not like it's creme de la creme, and these guys are really paying really cash over the top price. I had someone the other day drive up to me, and I'm renovating a property that I was going to list for like maybe 285, and then the lady pulled up New York license plate, was like, I'll pay 425 cash for this property. I'm like, whoa, I'm not even finished yet. And she's like, didn't even care. But this are the things that we're seeing. I don't even know if it would appraise. I did have some that didn't appraise, but just to generally answer your question, the market is doing amazing. What I am seeing though is in the tax lien sector, because we invest in real property where we do fix and flips and rentals. We buy tax liens to be able to get the real estate at a discount, and we also buy notes. So right now, 60% of the capital that we are deploying is for real estate deals, because the market is on fire. It only makes sense to just do all flips. get in, rehab it, put it on the market, crush it, try to make at least a 30% return or higher, and keep doing that process. So we're working on refining our processes to do it quicker, more efficiently. Just hired another project manager. So we're really laser focused on that because we believe there's a 4-year window somewhere around there where we have this great opportunity until, whatever else is going to come. So we're focusing on that. But the tax liens has been a little bit challenging because it's really hard to get inventory on the market. So a lot of people are now pivoting to that strategy and they're overpaying. Like they're bidding down the interest extremely low. So we're like, okay, we'll get back to that game. As far as the notes, we really just been doubling down on the inventory that we have and still trying to create these homeowner outreach program through our servicers to kind of really get some of those non-performers transition into performers. We've been having a little bit of success there, but we've been having really a lot of, most of our success is with the flips. Like we're just really on fire doing that. And it's a lot because of, a lot of that is to the migration from New York. So, everything is doing great. Good growing pains. I just hired a COO, so I'm pretty excited about that.
Congratulations.
And, that's going to be, that was a big step for me. So I know that that's really going to take the company to the next level because we got the right person for that. And yeah, I'm just excited. I pinch myself and is this real? Is this happening? And let's go. Let's keep it going. So things are great, man.
Yeah, that's great to hear. By the way, do you worry that when you see super rapid growth, and I worry a little bit about this. I mean, I've talked to people all over the country, and we just got our newsletter out, April newsletter, and all markets are hot with a few exceptions. Southern California is on fire. I mean, we just had the CG mastermind, obviously, just everybody's just saying these prices or bidding wars over the asking 10-20%. It's crazy. Their interest rates are climbing and the incomes are not really climbing. It's just people overpaying. The lack of supply is what's causing this frenzy. So what I personally worry about is affordability is continuously degrading. It's getting worse. I don't know at which point, but the rapid growth, the balloon can pop or substantially slow down because of affordability. At the end of the day, people can't afford, even if there's no supply at some point, they just can't pay, right? It doesn't matter what happens. At some point, the rapid growth has to slow down. And so I don't know. Any thoughts on this, or it just doesn't matter because the inventories are not there because distressed inventory is almost non-existent. No foreclosures, no distressed properties. Yes, you could pick something up, really old stuff that's been out there a few years out, and maybe, as you said, tax auction. But foreclosure auction probably is not functioning right now. And do you worry that this thing is going to blow up, and then suddenly another 2008 can happen? It's almost like from a value investing perspective, it's getting crazy. People are overpaying. It's no longer value investing. It's momentum investing. Momentum investing is only as good as momentum continues to roll. At some point, momentum runs out of steam.
Yeah. I mean, here's my take on that. Our fund is a hybrid fund. It's tax liens, mortgage notes, and real property. And we have a two-step approach with our real estate, which is the fix and flip and rentals. So the affordability to buy gets too high, we'll always have renters. People will just rent until things happen. So we created a hybrid diversified model because of that reason. So we're not stuck in one sector, right? So I'm actually reaping the benefits of a decision that I made in 2019 was to create a vehicle that invested in different asset classes, almost sort of like the fund thing you do. You're not just in one sector. You might have commercial, you might have private lending, you might have different things that kind of blend and kind of make sense. So if one sector is getting hurt, you still have performance from another sector. So being able to set your vehicle up like that will help you navigate through those times if anything does happen.
Yeah, I love it, Fuquan. I mean, you're preaching to the converted, right? I invest in a very diversified strategy or strategies. So having diversification is a critical benefit to you and your investors because you spread the risk. You just don't know what's going to get hit next, and hopefully nothing. But if something gets hit, you got other stuff that's going to do well. So
yeah,
that makes sense. But let's see what happens. It feels like the New York City is actually now undervalued, and the suburbs are, they've been on fire for so long, kind of reversion to the mean over time. It feels like there's going to be some comeback and some catch up from where things have been underperforming. But we'll see what happens. And appreciate your wisdom, appreciate your sharing and caring and the human touch. So thank you again. Let's do it again. We'll do another episode in a little bit. It's great to have you. Any final thoughts? Any good book? Any sharing? Sort of your last minute, whatever you like to say.
Yeah, I mean, really, I would say final thoughts is for me now is learning how to make sure when I look at my calendar, there's equanimity, and what I mean by that is, as much dates as I have with meetings and everything, I have things going on with my family. So we all get busy, and this is a little bit different from anything financial, but we all get busy doing our busy thing. I just want to make sure that the foundation is strong. What I mean by that is family, friends, that I kind of balance that time and have equanimity with not just work, that I kind of balance it off with spending time with loved ones and family as well. So I can have that mental equanimity. So that's just my thought, that things I'm working on now. I actually just joined the mastermind to help me how to do that leadership boardroom. So just became a member of that. I'm excited to kind of work on my personal vision more than my company vision. So that's it. That's my latest and greatest share.
Yeah, that's a great share. Appreciate that. I have a terrible joke to crack, but I've used it before. But this is the most important thing: the family. And I, by the way, I completely support what I do on my personal calendar. I block time when my kids have activities, like my girls ice skate. So if we have an ice skating trip, it's blocked. You can't have a call with me during that time on Zoom. I just block it. If we do anything with the family, block the time with family first, then you could fit in your business appointments. I completely agree with you. But the joke is back to the family. I just like to finish on a funny story. So I used to work in technology, and there was this terrible joke. People crack this joke and say it's absolutely bad. But what most people are supposed to, what are the priorities supposed to be in life, right? What's the priority number one? It's supposed to be God, right? Priority number two, family. Yeah. And priority number three is work or your business, right? These are the right priorities. But we used to crack this joke. We used to say, "Hey, I pray to God that the family understands that the work comes first," which was horrible. This is from the days of working long hours in technology world so many years ago. But the joke is a joke.
Yeah.
So, thank you, Fuquan.
No problem. Nice chatting with you, Mike. I really appreciate it.
Likewise. Thank you kindly.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike Zlotnick. Keep listening and keep investing Big Mike style. See you on the next episode.